Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's go back to the euro analysis. So in the long term, guys, the balance between the United States dollar and euro is changing gradually. In our opinion, not in favor of the United States dollar, because in the longer term, it's a major driving factor is the policy of the European Union. And recently we see some steps in the direction of the independence of this power. So you probably heard about Iran deal that European Union right now is trying to start its own independent policy on the Iran nuclear deal. This is understandable because a lot of companies have invested really big money, guys, in Iran. And Iran right now is the key to the whole Middle East region because it's mostly controlled right now by the Russia, Turkey, and Iran itself. And if European Union will keep the relationship with the Iran, the markets of the Libya, recovery of the Syria, North Africa, Egypt, so that area will be open for the European companies, and that's very important. And as soon as we will see next step in this direction, and if Europe will keep this tendency, that will be very supportive to the euro currency as well, because this could increase the upside momentum in gross domestic product and the economy. This will increase the investment confidence, the sentiment. So this should support euro in the longer term. Till the end of this year, within a few months, we think that the current tendency of the dollar strength will continue. So it means that we are confident enough with the reaching of the 114, 115 area, but reaching of the 110 area and lower stands under question. So currently it's still possible, but we think that 110 in the current circumstances will be the ultimate target. And currently, we do not think that action below the 110 is possible if this vector of the development will continue and will hold. So if Europe will find some inner forces to keep this policy that they have started. So speaking on shorter term perspective on this daily chart, here, guys, it seems that euro will continue action that I call as the creeping with the oversold. So the idea of this action is very simple. When the market hits the oversold, mostly on the weekly chart, it shows minor bounce, but as soon as some retracement has been taken and market is not at oversold anymore, it shows another leg down until it meets the oversold again. Then, as the oversold has hit again, market again shows minor retracement and so on. So now, in the last week, recall that we said in our video, somewhere in Wednesday, probably on Thursday, that hardly market will exceed the 1750 area, because that was the weekly oversold, and indeed that has happened. So market has hit the 1750, but that has become the floor for the recent week. And it seems that this action should continue on the next week as well. At this time, the floor will stand somewhere around 1680 probably, and that will weekly oversold will coincide with the daily oversold and take a look weekly pivot support one. That probably will become the next floor. Since market was at oversold in last week, in the beginning of the next week, we expect that some minor retracement will happen, but we do not suggest that this will be some kind of the really meaningful bounce or something of that sort. Most probable, some of the harmonic swings will be formed, either to the weekly pivot point or to the weekly pivot resistance one. Currently difficult to predict because this retracement actually has not started even yet. So that's two levels that could be reached. More probable that retracement will be small, because major retracement already has happened here. Right at this moment, if you remember, market was at the weekly conference support and a daily major XOP target, and only minor bounce has happened here. Here, right now, market stands not at any support, so this is not the major target, this is not the conference, this is not even the fib level, guys. That's why the chance of the minor retracement stands greater than on some deeper retracement. So, what kind of supports we have here? On the intraday charts, guys, we see that market stand at 127 extension of this upward retracement. This is actually a reaction on the XOP on the daily chart. If you measure the extension, you can see that market stands at 127 extension. It's kind of the minor washing risk has been formed here of these lows. And take a look, small grabber has been formed. This is the weaker type of the grabber, guys. I prefer to get the grabbers in a direction of the tendency. So, for example, right here, so the market stands in a bearish trend, bearish grabber has been formed, market dropped. Grabber has been completed by taking out of these lows. This type of the grabbers I prefer. But here we have the grabber against the tendency, so we have the move down, but grabber stands in the opposite direction. Well, since the target of this grabber stands very close to by this pattern, my market should take it out of this top. This probably will be formed. Could be completed. So on the hourly chart, we have another bullish pattern. This butterfly buy has been formed. This market has reached 127 extension. And first level that could be touched stands right here is around 118, 119.50. This is weekly pivot point. If you will measure the harmonic swing, guys, you will see that's approximately point in the same area. So that harmonic swing is very typical. So you can find it's at the same stance here, here, here. It's approximately the same distance. This is the first harmonic swing. Second harmonic swing, as I said, could point on the recovery right to the weekly pivot resistance one. So that's two harmonic swings that we could keep an eye on. Also, of course, as usual, we will keep an eye on different ABCDs or something of that sort. So, for example, if we will use this minor, it probably could give us kind of the XOP somewhere in this area. So let's take a look at it. Right, so you can see XOP stands inside of this area, so it's cluster of supports. It's major fib support also from the recent drop, somewhere around 118, 1850. That's the first destination point, and it's really very probable that retracement will be over somewhere in this area. And after that, market really could continue to move down right to the floor. As we said, floor on the common week probably will be somewhere 1680. So it'll be weekly, daily oversold, and weekly pivot support one. So that's what we expect on next week in the euro currency. Speaking, guys, on the double repo pattern, I think that we should right now forget about it. Why? Because by the shape of the price, you could say that maybe it's still possible to forming of the double repo if market will show its fast recovery and close about the 3x3, for example. But guys, this leg here, it's not normal for a double repo, because what the double repo is, in fact, this pattern is the capitulation of the bears, and this final drop on the double repo, when the second bottom is forming, this is the attempt of the bears to push price for the previous lows and reestablish downward action. And bears should fail, and failure usually leads to fast upward recovery. But here you do not see it. You see that market gradually just moved below these lows and stands here. This is, of course, not the double repo. That's why, despite that by the shape, we still could visually imagine and suggest that maybe some kind of the double repo could be formed, but the price mechanics, it's not the double repo, guys. That's why I think that we should not to pay attention to this pattern anymore, and just let's keep watching what will happen on next week, what retracement will be. And first of all, yes, of course, we need to keep an eye on the 118.50 as the first destination of this bounce.